lots of speculation about whether or not we are going to see a soft landing, how exactly the job market, the cooling that we're seeing there fits into that narrative. How are you looking at that?
Yeah, unfortunately, a soft landing is unlikely. I don't think the Fed is ready to declare victory on inflation yet. And so all these rate cuts that are being priced in the market, I don't think they actually happen unless you see a recession. To me, the Fed is still worried about wage growth. Wage growth is in the low 4 to mid 4%, and they would like to see it back to 3.2 to 3.5% to feel comfortable that they have extinguished the last embers of inflation. At least historically, the only way that has occurred is through job losses. And you are starting to see the labor market weaken, which I think you'll see more evidence of in this week's report.
And so for the Fed, that's going to be continuing to look for that evidence as they've been able to lean on the employment market thus far for some of their inflation combating moves, more notably here. When we think about what you would be looking for that would signal to the Fed that, okay, now perhaps we should be more aggressively thinking about beyond just holding steady, what a cut may look like at some point next year.
Yeah, I don't think they cut until they see that labor market crack. And unfortunately, once the labor market cracks, it tends to trend. And so at least historically, when you've seen the unemployment rate on a 3-month moving average rise 0.5% or more above the prior 12-month low, the next stop, at least back to World War II, has been an increase in the unemployment rate of 1.9% or more. Now, that doesn't mean it has to happen, but it has in the past. And I still think it's likely it does this time, just as you see the Fed keep the pressure on the economy and the labor markets. And that's the reality that I think is going to happen over the coming quarters. And you'll see that job market continue to weaken, which you're already seeing signs. Continuing claims are up 24% year over year, for example. We have never not had a recession, at least the last 8, when it's at that level. And so I think you're seeing more and more evidence that companies are beginning to look at cost, are starting to cut labor. And that's going to be a trend that I think continues into the beginning part of 2024.
We certainly are seeing companies become a bit more disciplined when it comes to cost. So then, Brent, what does this mean then for investment portfolios? Should people be maybe getting a bit more defensive in their positioning ahead of this uncertainty?
Yeah, certainly we've increased our bond allocation over the prior few quarters as we think bonds offer real value, especially in a hedge against equity markets, especially equity markets that are down because of a recession. And so certainly the bond market, even though it has rallied quite a bit over the past month, still offers value for investors. I think it's kind of an interesting point to think about that the market may have discounted some of a recession already. And so I think small and mid cap stocks, I think, will do well towards the later half of 2024 as you come out of that recession. And I think there's already some evidence that you could say small caps and mid caps have discounted some sort of an earnings decline, some sort of a recession with their price action much more limited than the S&P 500, which is considered to be higher quality and more defensive in nature. And so I guess to me, all is not lost for equity investors. I do think there are opportunities in the market. I just think those are likely to be amplified and brought to life as you push throughout 2024 and into the back half of the year.
Do you believe that the beginning of 2024, as we're kind of thinking about perhaps some investors' New Year's resolutions out there, does 2024 bring a hard reset to any portfolio positioning, or is there a different kind of top idea that you believe is going to emerge?
I think leadership changes. If you look back in every economic cycle going back into the 70s and 80s, leadership in the market has changed. And so I don't think that investors will be talking about the ARK holdings that you mentioned. We'll be talking about technology and growth stocks. I do think there's other values and other opportunities in small and mid caps. And I think even international equities, I heard earlier talking about a dollar weakness. I think over the next few years, the dollar will be weaker. And I think that's a tailwind to international economies and their stocks. And so the New Year's resolution should be don't abandon diversification, focus on any one part of the market, including those that have done well recently, because I think leadership will change as you push into a new economic cycle that is brought upon by the end of a recession.